Listen to me, because what I am about to tell you could save you hundreds of dollars in unnecessary fees, hours of frustration, and a whole lot of heart-wrenching anxiety. If you are retired, or if you are anywhere near that glorious retirement finish line, you need to pay close attention. Today we are talking about MoneyLion Banking. Everyone is talking about these flashy financial technology apps, these neobanks, these digital platforms that promise you the world right from your smartphone. You see the advertisements, you see the shiny promises of early direct deposit, cashback, and instant advances, and you ask yourself, is MoneyLion Banking good for someone in retirement? Is this where I should put my hard-earned nest egg? Let me give you the answer straight up. No chaser, loud and clear, absolutely not. Do not do it. Now, why am I being so direct with you? Because when you are in retirement, your financial priorities completely shift. When you were 25 or 35, you were accumulating wealth. You could afford to take risks. You could play around with apps that offer tiny cash advances against your next paycheck or give you credit-building loans. But in retirement, you're in preservation mode. Your goal is to protect every single dollar you worked 40 or 50 years to save, while making sure that money works as hard for you as possible with maximum security and zero friction. Let's look at what MoneyLion actually is. MoneyLion is not a bank. Read the fine print, people. MoneyLion is a fintech company, a technology middleman that partners with bank institutions like Pathward to hold deposits. Now, yes, deposits held through their partner bank are FDIC insured up to $250,000. But when you deal with a fintech middleman instead of a direct, traditional bank or major credit union, you are adding an unnecessary layer between you and your money. If there is an issue with your account, if your card gets locked, if you suspect fraud, who are you going to call? You cannot walk into a branch and sit down across the desk from a human being. You are forced to navigate an app, deal with chatbots, and wait for automated email responses. When you are living on a fixed income, having your funds tied up or inaccessible for even 2 days because of an app glitch is an absolute nightmare. That is a fear you do not need in your golden years. Now let's talk about the fees, because this drives me crazy. MoneyLion markets itself as low cost, but those monthly charges add up. Their basic Roar Money checking account has a monthly fee. Then they have premium tier memberships like Wow or Credit Builder Plus that charge anywhere from $9.99 to nearly $20 a month. Why on earth would a retiree pay a monthly fee for a checking account or a financial app in this day and age? You shouldn't be paying $20 a month, $10 a month, or even $1 single a month just to access your own money. That is money coming directly out of your retirement budget that could be paying for your groceries, your prescription medications, or a special treat for your grandchildren. And what are you getting in return for those fees? Features that you, as a retiree, simply do not need. MoneyLion's marquee features are things like Instacash, interest-free cash advances on your upcoming paycheck, and credit builder loans. If you are retired, you don't have a bi-weekly paycheck from an employer to advance against. You have Social Security, pensions, or withdrawals from your 401k or IRA. You shouldn't be taking short-term cash advances to survive from week to week. If you find yourself needing short-term cash advances in retirement, that tells me we have a fundamental budget problem that an app cannot fix. Here is another huge red flag for retirees: the return on your cash. When you are retired, your liquid cash reserves, the money you need for daily living expenses and emergency funds over the next few years, needs to be earning top-tier interest safely. Right now, there are established, reputable, direct online banks and major credit unions offering high-yield savings accounts paying 4% to 5% or more in annual percentage yield, completely fee-free. MoneyLion's standard banking setup is not designed to give you that top-of-the-market high-yield savings return on your cash reserves. Every single day your money sits in a low-interest checking app, you are losing real purchasing power to inflation. On a $50,000 emergency fund, the difference between earning 0.1% and 4.5% is over $2,000 a year. Why would you leave $2,000 on the table just to use a trendy app? You wouldn't. You also have to look at the user experience. MoneyLion's app is packed with upsells, loan offers, crypto trading features, and gamified rewards like shaking your phone for cash back. It is built for a 22-year-old gig worker who needs $50 until Friday, not for a 65-year-old who needs straightforward, transparent, hassle-free account management. Cluttered apps lead to mistakes. Accidental clicks can sign you up for paid subscriptions or investment tiers you never wanted. So, what is your actionable takeaway today? What should you actually do with your money instead? First, step away from fintech apps that target short-term borrowing and credit building. Second, if you want digital convenience with high security, move your cash into a proven, direct online high-yield savings account or a top-tier credit union. Look for institutions that offer zero monthly maintenance fees, zero account minimums, true FDIC or NCUA insurance directly in their own name, and robust 24/7 phone customer support with real human beings ready to answer your call. Third, streamline your banking. Keep a primary checking account at a reliable bank, preferably one with physical branches nearby if you ever need cashier's checks, notary services, or face-to-face assistance. And link it to a high-yield savings account where your cash reserve actually earns meaningful interest. Retirement is the time for clarity, simplicity, and maximum protection. Do not let shiny app graphics or fancy marketing distract you from what matters most, keeping your money safe, fee-free, and working for you. You have worked far too hard for your nest egg to compromise now. Stand tall, protect your money, and stay safe.